I think to build wealth, it's about being really consistent in your investing approach. And also, you got to do the work and make the right decisions. I'm a fairly self-motivated person. I never sleep in ever. I have a stone cold shower every morning when I wake up, even through winter. It's sort of part of these rituals that I do, I guess, that help me get started and get motivated every single day to do whatever I'm doing. Given what's happened to real estate, which was a long, long time ago, I wish I'd have bought more. But one thing I do well, I guess, was I bought real estate fairly young. Didn't procrastinate. That's proven to be a good trade. I've had winning trades and I've had losing trades. You've just got to be consistent about long term, I think.
And that winning and losing on trades, that's about sizing the bet to a degree, right?
What's worked for me investing wise, I think, would be
private markets investments are investors can find some real value. I find the best way to learn is learn from someone who's done it before and given it a go. Hi, I'm Travis Miller, host of Grow Your Wealth podcast. Thanks for joining me here today. On these podcast sessions, we're going to talk through how certain investors have navigated the bumpy road of investing, whether it be through business or investments in general. Thanks for listening today. Welcome back to the Grow Your Wealth podcast, where we bring you insightful conversations with industry leaders to help you navigate the world of finance and investments. I'm your host, Travis Miller, and today we have a very special guest, Mark Sherwood, joining us. Mark needs a little introduction to our existing iPartners investors, as he's our group investment strategist and leader in investor education and market insights for the business. Today we'll delve into Mark's extensive career from his early days at Price Waterhouse in the undergraduate cadet program, where he decided he was not interested in being an accountant. He returned to university where he excelled in economics. With over 20 years of experience, Mark has worked across the Asian region, guiding high net worth investors to invest across a broad spectrum of investments, including markets origination, syndicate and secondary trading, equity markets, managed funds, ETFs, private credit and equity, as well as institutional real estate investing. Mark is a passionate sportsman in his spare time and can turn his hand at anything from golf and boxing to running half marathon trail runs. Not many of us can keep up with this powerhouse. We'll also explore some of the key lessons he's learned along the way. So without further ado, let's dive into our conversation with Mark Sherwood. Thanks for coming along, Mark.
no problems. Thanks for having me, Travis.
How about you give us a bit of the backstory of who you are and what you get up to on a day-to-day?
Yeah, no worries. It was a pretty strong intro. I hope I can live up to that. In terms of backstory, where I grew up, I'm a Sydney-based boy, essentially. I grew up in northwest Sydney in the Hills District. Went to the local primary school in that area, and then I did manage to get into a selective high school, and went to the local selective high school essentially at Borkham Hills.
It's pretty good.
And then followed on into university in Sydney, and then obviously into the work environment.
I saw your mum was a primary school teacher.
Yes.
Did she whip you into shape to get you in a selective school?
Yeah, she
Or was
actually
it all
did.
you?
She actually did work in my primary school. I think, part time when I was quite young, which I didn't like. No kid likes their mum working in the school.
Yeah.
Luckily, she wasn't a high school teacher, so she was never at my my high school. But parents were very hardworking people. I think. I think
it's good. My father was a teacher as well, and he actually taught me in class, which was traumatic. It was only one of those spare lessons, but I think the teaching background kind of is a good base for kids. Kind of you've got to do well in school to take that first step.
Absolutely,
it's pretty handy.
Yeah, definitely.
Now, what do you get up to day to day, iPartners?
Yeah, so at iPartners, my role is as an investment strategist. So I kind of lead the investment communication. I do a lot of presenting around investment insights. I write a lot of papers as well that we flow through to the investor base. So everything in relation to sort of in communication, media, insights. That's really my role, and I really enjoy that.
Yeah, we see you on AusBiz pretty regularly.
Yeah, absolutely.
We can see you love it.
Those sort of things are okay. I don't mind doing those sort of things.
But it fits in with the iPartners philosophy, right? We've always been the way to make alternative asset mainstream is education. And that's why this podcast exists. That's why you're writing articles. That's why you're on AusBiz. We're providing education, and that's how we think alts become mainstream.
Yeah, absolutely.
So
I think it's so important.
Critical part of the business. Now, we take a step back, right, through your education. So what did you study at uni?
Yeah, so at uni, I did a business degree at Macquarie in Sydney. And I think I took a business degree because I had absolutely no idea what I wanted to be, which is pretty common, I guess, with kids coming out of year 12.
Yep.
So I took a business degree because it was broad. And then interestingly, I did have a bit of a monumental first year actually, because I never did the economics stream in the high school certificate, I guess. But then in first year economics, I actually did get a letter back at the end of the year from the university to tell me that I'd actually topped the year.
Gee, that's good.
So in a way, that was a bit of a surprise for someone that had no sort of economic background at that point.
Yeah.
And that probably drove me down a certain path.
Yeah, gotcha. We talk about early career. So you obviously selective school, pretty smart. Sounds like you're pretty good at uni, top the class in economics. Where did that roll you to from there?
Oh, I don't know that I was that smart at high school, to be honest. I think I got into a selective high school because I was fairly good at mathematics.
Gotcha.
I was pretty hopeless at English from memory, which is kind of ironic because now I spend a lot of my time writing papers and writing insights. So English and grammar is something I'm very passionate about now, which is ironic, 20, 25, 30 years later, whatever it is. But yeah, I think it was mathematics back then that kind of drove me down that path.
Gotcha. And then you went into cadetship, right? You decided you're not going to be an accountant. Why was that?
Yeah, I did 1 year at Price Waterhouse, which was a great firm, great operation. And because they'd offered me, like an undergraduate cadetship. I hadn't finished university at that point. And whilst I got on well there, I absolutely didn't like the role, and it made me just realise I didn't want to go down an accountancy stream, which is what that role very much was. Yeah. So I kind of chucked it in after 1 year, with a potentially free option to go back if I ever wanted to use it at the time. And I went back to university, and I just finished my my university studies.
And then did you go? That's when you stepped into the banking world.
Yeah, that's exactly right. So then I got a graduate role with ANZ.
Yeah, gotcha.
Started in their private banking arena, and that took me down a path of private banking into investment markets. Gotcha. Sort of a year later.
And how did you end up offshore? Career-wise?
Yeah, offshore was interesting. I worked at TD Securities, the investment bank of TD Bank, which is the second largest bank in Canada. I worked at their operation in Sydney when in the heart of the GFC, when everything was imploding.
Yeah, gotcha.
And part of that, they made a large management decision.
Gotcha.
That they were shutting down the Sydney and the Tokyo trading rooms, which is I worked in the Sydney dealing room essentially. Gotcha. And so essentially they merged those roles into Singapore.
Yeah.
And I went home to my wife one day in the heart of the GFC and said I can either take a redundancy in probably the worst time as a financial markets person to ever take a redundancy, or we can head over to Singapore. So we packed our bags and went to Singapore for a couple of years.
It's interesting. A lot of people sort of wonder how you go from Australia to offshore. And quite often, it's a bit of dumb luck, because a lot of young kids want to work in finance, in banking, offshore, and they wonder how you take that next step. But it's often a boss who backs you, a little bit of dumb luck, random. Yeah, but a lot of people end up offshore. It seems to happen.
Yeah, I mean, that day was probably one of the most fascinating days of my working life, because if you could picture it, there was probably 250 people in the organisation, and something like 235 of those people got made redundant that day. So it was, it was a very emotional day to be in any working environment. But yeah, then it took me on a path. Then I ended up, doing a few years up there in Asia.
Yeah, it was good. And coming out the backside of the GFC, it was fun too, right? And the learnings, it was traumatic for a lot of people because from a personal wealth and career perspective, but coming out the other side of it educationally, it's pretty interesting. Yeah,
that's right. I worked in two different dealing rooms up in Singapore. I worked in TD's one, and then I worked in Credit Suisse's Singapore room. And yeah, they were fascinating places to work because everything was bouncing back essentially at that time. So yeah, it was a really interesting part of my working life.
Sounds good. Hey, if you're enjoying this, please subscribe on whatever platform you're using. It helps us build a community. We want to educate investors, and this is what it's all about. Now, a couple of people have influenced you through your career. Top three, you can start with one.
Yeah,
I think people would turn the dial for you.
I think career influences, I think in sort of chronological order, maybe the first one that probably influenced me was first year university,
Gotcha.
whereby, I made that comment about economics before. I had a brilliant economics tutor in that first year of
gotcha.
university. And unfortunately, I can't remember his name, so long ago, but there's no doubt that he just started to sort of give me the economics 101 understanding really, really clearly. And then as per my comment, then I sort of went home and went, wow, I better take the economics major,
gotcha.
which I did. So he definitely had an influential. It just shows the power of a university tutor. He was the tutor, not even the lecturer. He was the tutor. But
Speaking of tutors, we don't remember your name, but we say thanks.
yeah, that's exactly right. Yeah, that's exactly right. And then after that, influential people in my career. After I think I've learned bits and pieces from various people. I wouldn't say I've ever had a mentor. A lot of people have a mentor these days. I don't think I've ever had a mentor per se. I think I've had several bosses that I've learnt bits and pieces from. I definitely learnt how to kind of sell from the gentleman that ran Asia for TD. That was Chris Pashley.
Yeah, gotcha.
He had an incredible ability to articulate, the value out of something.
Yeah,
so I
gotcha.
definitely learnt something from him as well.
Yeah, he always had a good reputation too, didn't he?
Yeah, he did. Yeah, so he's one that just comes to mind as someone that influenced me, during my career. There's no doubt about that.
It's interesting, that mentor thing. I think our generation sort of, you're a bit younger than me, but it wasn't as popular, right? These days, people have multiple mentors, and I do get it because, having someone to bounce ideas off and, having, Bob Mansfield as a chairman of iPartner has been really useful for me.
Yeah.
But it's definitely these days, a mentor is a more common thing than it was when we were navigating our careers. It was more the mentor was probably your boss in the early days, right?
Yeah, exactly.
And you just you got a good boss.
Those days,
mentor.
yeah, correct. And you want to have a good boss. And I had some great bosses. I probably had some bosses that I found working for hard, but that's just part of working life, isn't it?
Yeah, for sure. Now, pivotal moments. Sounds like the 215 people redundant was a pivotal moment for you. Any other in personal life,
definitely
professional life, when the dial was turned?
In professional life, yeah, definitely that was a pivotal moment. The GFC, I think probably was for anyone that worked in financial markets, through that period anyway. And then lo and behold, I had that situation happen. I think other pivotal moments, maybe more recently for me, I probably felt a bit worn out in the banking sector after maybe 20 years of working in predominantly for banks.
Yep.
Or banks or investment banks. Whereby I kind of got a bit sick of big public company hierarchy and bureaucracy, I guess. And that probably led me to make some change, 4 or 5 years ago.
For sure.
And iPartners is now part of that, where I now work for a private organisation as opposed to a big public company. So I think that's probably been another monumental shift for me, where it's been really healthy. I've really enjoyed working for a private company.
Yeah, I was going to touch on that a bit later. We might as well go into it now. But yeah, what makes someone, and what were you thinking going through? Because I know your career at Westpac, really successful. Going up in as far as the hierarchy goes. What makes someone make that call to jump from a relatively stable, high income, nice bonuses, career trajectory, and go, I just want to do something different?
Yeah,
it's quite entrepreneurial to a degree in thinking.
Yeah, sure. You're right. I felt like I had a really great career in private wealth at Westpac, and I was there quite a long time. So you obviously don't stay in a role for a long time unless you really enjoy it. So that was fantastic. But to your point, I think towards the end of it, I wanted to change, and it wasn't necessarily about one bank over another. It was more about doing something a little bit different. And I think that was a function of having worked for banks for circa 20 years, I guess. So that sort of led me to think, well, let's go out on a whim and try something a bit different.
Yeah,
I think there's pros and cons with every role that you do, and it's really about being comfortable with where you are and trying to do something a bit different every now and then.
Yeah, that's brilliant. Okay, now a little bit philosophical to a degree, but we'll dive into the why. What drives you in business? What gets you up in the morning? What interests you?
I think, in my role in business, what drives me, I really like communicating with the investor base. I like being part of sort of the education piece, of our business. So, I'm probably pretty self-driven because I think the role suits what I enjoy doing. I generally like helping people come up the education curve wherever I can be of value to them, essentially. Gotcha. So that sort of fits in nicely with the current role that I do.
And yeah, my observations too is you kind of enjoy mentoring and helping the younger people in the organisation, right? And so I think kind of hand in hand with education in general. But as you're getting older, you sort of pass on some of that knowledge to other team members, which is critical, right?
Yeah, absolutely.
And you've got to enjoy doing it, right?
Yeah, absolutely. I mean, we've got a cross section of ages and experience, in the business, and you're exactly right. I really enjoy working with some of the newer generation of the business as well. In the same way I would if I was giving an investor education seminar, essentially.
Hey guys, I hope you're enjoying this episode. If you want to learn more about alternative assets, there's a book here you can read, How You Grow Your Wealth with Alternative Assets. Now back to the episode. So you've spent a lot of time, particularly at Westpac and now iPartners, working with high net worth individuals and very, very high net worth individuals. And a lot of them come from entrepreneurial sort of background, right? Is there any advice you would give to someone that's thinking of taking that leap into an entrepreneurial sort of, venture?
Yeah, I'm not an entrepreneur myself, but I've definitely worked with a lot of entrepreneurs. I would say that they need to make sure they're in an environment that is conducive to entrepreneurialism.
Yep.
That might not necessarily mean you've got to go out on a complete limb and try and found your own business. But I think, what I've observed in that space is that, some environments probably are more conducive to taking an entrepreneurial flair than others. It probably depends on the nature of the business, the nature of the company, the size of the hierarchy as well.
Yep.
So I think if someone has that real entrepreneurial mindset, they've got to try and make sure they're positioning themselves in a spot that that coincides, I would say.
For sure. Yeah, it's about a little bit of timing as well, right? Yeah. You got to kind of at times sort of shore up your financial position because that can be tough for a period of time.
Absolutely.
But yeah, there's no question.
Most business owners or founders forewent a lot of money for quite a long period of time, and so you got to be fortunate enough to be able to do that. Absolutely.
Sure. Now, what's worked for you, across your career, personal life? A couple of things that you've just said there, that worked. That was pretty good. I did that well.
Maybe I'll correlate to investments.
Yeah.
If you like. I mean, what's worked for me investing wise, I think would be consistency.
Yeah.
And why I say that is I think to build wealth, and this is obviously what your podcast is about. I think to build wealth, it's about being really consistent in your investing approach. So, what I do see a lot of people do, I think, is I see a lot of people be hesitant.
Yeah.
But then I also see a lot of people rush into things as well. So I think there's a healthy balance to growing wealth where it's about being consistent in your investing, but also, you got to do the work and make the right decisions. So I think to answer your question, where I've done well is I think I've been always thinking about my own investing, and I started my own investing when I was 20 years old, so started pretty young, and just being consistent, just always trying to slowly build the wealth pile essentially.
I remember back at ANZ when you would have been just past grad, you were buying properties.
Yeah,
you got on your toes pretty early.
In hindsight, given what's happened to real estate, over that period of time, which was a long, long time ago, I wish I'd have bought more. But one thing I did do well, I guess, was I bought real estate fairly young. Didn't procrastinate, which other people when they're young might do. And that's proven to be a good trade.
Yeah, I mean that consistency is critical, right? Like we learn across the journey. There's no get rich quick scheme. It takes time. You got to size your bets. You got to be patient and consistent.
Absolutely, and you're not always going to get it right either. I've had winning trades and I've had losing trades.
Yeah.
Even in one asset class being real estate.
Yeah.
So you've just got to be consistent about long term, I think.
And that winning and losing on trades, that's about sizing the bet to a degree, right? Like if you put too much on something and it happens to be a losing trade, take into account you will have winners, you have losers. You've got to make sure you're sizing your bet appropriately
100%.
and you can tolerate the loss, so you kind of got enough time for the wins to start trickling through
100%.
across time.
Yeah, definitely.
Very good. And then what hasn't worked for you?
What hasn't worked? Probably wouldn't buy high, tall residential apartments.
Gotcha.
Bought one of them. That was a pretty poor trade.
Yeah, cyclical, I guess.
Yeah, cyclical. So yeah, I'd probably stick with alternatives, stocks, real estate. Probably stay away from anything high rise. That's something I've experienced.
Fair enough. Now, for the listeners, what's a couple of tips in business? If you were speaking to, Mark 20 years ago, what would you tell him?
Mark 20 years ago, I'd probably tell him to probably go harder from an investment point of view in your 20s. I was pretty active myself, but in hindsight, you look back, go, geez, I wish I'd have doubled that. Doubled that in those early investments, because they probably would have worked out well. That said, some of what I did early on has worked out well. I still own an apartment that I bought when I was 21, for instance, and I still own it today. And I kind of think, why would I ever sell it now? So. Yeah, you definitely got some right when I was young.
Yeah.
But then you could always do more, essentially.
It's easy to beat yourself up in hindsight.
Absolutely.
Everyone's an expert.
That's it. Yeah, definitely.
Hey, if you're enjoying this, please leave a review. It's really important to us. We're trying to build momentum around education, and better reviews will get more people coming and listening. And now, what's success for you? I know you like having a hit of golf.
Yeah,
you're a family man.
Yeah,
what's success for you, and how are you achieving it?
Yeah, I think you touched on it there, Travis. I think success for me is about family.
Yeah,
it's about a harmonious family situation. I think I'd view success as having a happy, stable household that you go home to when you go home from work every day. I think I've largely got that right now. I've got a couple of great kids, I've got a really happy household. So I think that's how I would measure my success. I mean, obviously you need an element of wealth to be successful, or to be comfortable, not successful, shall I say. Comfortable is a better word, definitely. So you need to be comfortable. But I think, I would measure success in what the stability of your household situation is when you get home,
Gotcha.
That's very much what I focus on. Yeah,
it makes sense. I mean, it's like everything in life. You just got to get balance, right?
Yeah,
you got to balance everything up. And so, what's your handicap at the moment?
My handicap's 2.
Yeah, what's the goal
at the moment?
What's your range?
Oh, I was 1 only 2 or 3 weeks ago. So a couple of bad rounds the last couple of weekends. But as you said, golf's a big thing for me.
Is there a correlation between the family happiness and your golf handicap?
Oh, definitely. Yeah, definitely. I think my wife has given up, asking me how the game went when I get home from a game of golf, because she can pretty much tell by the look on my face. The weird thing about golf though is you probably have 8 bad rounds for every 2 good ones that you have. So it's not a great ratio in that regard. But to answer your question, my sort of golf handicap has ranged from about 1 to about 6 over the last sort of 20 years, I guess. I'm still trying to compete with the blokes that are a lot younger than me at the club, that are sort of in their 20s, and I'm hanging on for as long as I can.
And how'd you get into golf? Was that family as well?
That was my grandfather.
Gotcha.
Yeah, interestingly. And my grandfather had quite an influence on my life, actually. I was really, really close to my grandfather when I was a kid. He was a golfer, and he started to take me to the course when I was a teenager. And so he was a great influence on me, actually, in terms of teaching me how to play golf, but also just in terms of even stuff that correlates to my working life. Because he was sort of a self-directed style investor himself, and I think he might have given me the early seeds of some interest in wealth and investing as well. So yeah,
very good. And you've got your kids into golf?
Yeah, my son. My son's learning. He's doing all right. He's starting to hit it pretty far, which is good. Still makes a lot of mistakes, but that's what kids do.
I mean, you're at that age now. You got to start living your life through your kids. So that sounds about right.
That's true.
Right, I'm going to get a couple of quick fire questions. Now, what was your first job? You can go as young as you want to
go. Paperboy.
Yep.
Actually, interesting. I got a job as maybe I was 12 years old. Paper run in the local neighbourhood. I put a milk crate on the front of my push bike, my BMX push bike, as every 12-year-old kid does. Put the papers in there. First shift, started delivering the papers, and some P-plater thought it was funny to drive up and down the street and swerve at me, this little 12-year-old kid. And I went bolting home to mum and dad, crying, and said, I never want to do that again. I lasted one shift.
That's pretty. Well, what was your second job?
Then McDonald's.
Okay.
I think after I hated that, thanks very much to that P-plater, whoever he was. I then got a job at the local McDonald's.
Surprised how many people starting McDonald's from the people I've chatted to.
Well, it makes you learn how to work. Work hard to earn your money. Yeah. I think it's good grounding, right?
We touched on this one earlier about sort of advice for your younger self, but just you to pick one thing other than what we've already talked about.
For my younger self?
Younger self. We touched on it earlier.
Yeah, I think do more. Well, if it's correlating it to wealth investing, do more when you're in your 20s. Yeah, I would say that's the key.
Gotcha. What motivates you most as a person?
That family situation, I think, motivates me. Although that said, I'm motivated to do the right thing by my family and have a happy, harmonious household. That said, I think I'm a fairly self-motivated person. I never sleep in ever.
Gotcha.
I have a stone cold shower every morning when I wake up, even through winter. It's sort of I have these sort of rituals that I do, I guess, that help me, get started and get motivated every single day to do whatever I'm doing.
Yeah, gotcha.
I think I'm a fairly self-motivated person.
Yeah, gotcha. What's the biggest mistake people make when building wealth, and why?
I think you touched on it a little bit yourself. I think sizing.
Yeah.
I think from what I've seen, people missize investments. I see it all the time. Yeah. They probably put too much too high an exposure to a high risk investment that may well pay off, but may take a long time to pay off if that's the case, or obviously have an outcome that that wasn't favourable.
Yep.
And probably they probably undersize their defensive part of their portfolios, where that's just going to end up paying you a nice income stream.
Gotcha. Great. When you're not working, aside from family and golf, how do you spend your time?
Running as well.
Yep.
Yeah, I run. So my two things, I guess, sport-wise, would be the golf and running.
Yeah.
I quite enjoy running through the bush. Actually, I've got some nice local trail tracks. So most of my runs, I tend to head down into the bush and do do some kilometres down there, which maybe just takes my mind off life for 40 minutes. The only thing you can hear is the birds and the river flowing, I guess.
That's pretty. What about Parramatta? Do you follow the league?
Yeah, is that a leading question?
How'd they go?
Is that because I follow a very, very painful rugby league team? Is that where you're going with that comment, Travis?
Pretty much.
Yeah.
How'd they go this year?
Thanks for the reminder. Yeah, not well.
No,
not well.
Really appreciate
second last.
Second last. It's better than last. Appreciate you coming on. Now, if you're interested in connecting with Mark, you can connect with him on LinkedIn. We'll include the link in the show notes. But thanks a lot, Mark, for coming on.
Pleasure. Thanks for having me, Travis.
Thank you. Hey, if you're enjoying this, please leave a review. It's really important to us. We're trying to build momentum around education, and better reviews will get more people coming and listening.